What's going on, everyone? So we have to absolutely talk about the monster and the beast and the one I love, yet one I sometimes hate, and that is Tesla. So Tesla was up 1 point at 78.80 points on the day's session. I think we were as high as 11 or 12% on the day. With that being said, I took two trades on Tesla today, two of them early in the morning, worked out. Wow, I can't even talk. Worked out fantastic this morning. And then I took another trade to end the day, and I'm still kind of holding that position. I'll make a video on that tomorrow and kind of outline that. But let me just quickly show you guys what I was looking at early in the morning here. Okay. So what I was looking at here early in the morning, if we kind of look at this whole run up here, right? So immediately, right? Immediately off the bell, right? Ding, 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 the bell runs, and so does Tesla. There it goes, comes out of the gate hot. I mean, like a freaking track star, right? So Tesla comes right out of the gates, breaks this linear regression here over all levels. Okay, all levels here, all of these levels here are individual levels of supply and demand, breaks all levels of supply and demand and puts in an opening range price of around $684. Now, I know a lot of you guys like to trade stocks right off the bell. The market has kind of been presenting those opportunities. Either we're getting big pushes right off the open, or we're getting big flushes right out off the gates as well. Those moves are kind of presenting fantastic trading opportunities for that first 5 to 30 minutes. Now, for myself, I always like to preach, if you're a newer trader, kind of sit back on your hands for that first 30 minutes of the market open, let the market kind of digest, and then see what kind of confirms going into that second hour. I preach that like clockwork. But as a trader, we also need to be able to adapt to the current market conditions. Now, as of late, and I'm speaking for the last week to 2 weeks, those moves after the first hour, excluding today, those moves after the first hour, sometimes that's the whole high of the day. Then the stock kind of pulls back, it never really goes any lower, and then it just goes sideways for the rest of the day, kind of just creating a frustrating choppiness action for the rest of the day. Now, kind of adapt, understand it's not always going to be like that, but right now, the way the market's kind of going, whatever the market's doing right off the gates, if it's taking out pre-market highs, you want to get long, you want to scalp it, you want to get green, you want to get out. If the market starts to flush and it loses those pre-market lows, you want to just jump all over that. You want to get in, you want to get green, you want to get out. Obviously, you want to respect your stop loss. You want to respect your risk. You don't want to just go all in, risking the wife and kids on one particular trade and then, kind of blowing yourself up. So definitely manage your risk when it comes to that. But, the trades that I took today, I took two different trades, but it was technically around the same entry point, right? So what I was looking at here after this first 30 minutes of the market, we're kind of looking here, 655, we put in a high of 706.82. Okay, so I kind of alerted this in Discord. I said 707, 708, if it could break that, might be a good shot for an opportunity to go long. Why was I looking at that? Because I was looking at the first 30 minutes of the market, which is the first hour open, the first hour of the open, and I was taking those highs, and I was telling myself, if Tesla could go ahead and confirm, that kind of opening range high on the first hour candle, which I'm going to mark out for you here. Let me pull up my drawing tool. This is the first hour candle here, right? If we were to mark out the first hour candle, tell ourselves, very simple, selves, if Tesla takes out the first hour's highs, I'm going to get long. Now, what am I going to use as my stop? I'm going to use the rising support. So what do I have as my rising support? Because the move was so extended, we have the top of this Bollinger Band as well as this 200-day moving average here. And then we also have the 5-day moving average here. Depending on your risk tolerance, pick one, use it as your stop. If the Bollinger Band is your stop, well, if we close below that, you're going to exit the trade. If the 200-day moving average is your stop, well, if we close below that on a 5-minute candle, or give it 15 minutes or 30 minutes, I'm going to go ahead and exit that trade. Or do you have a little bit more of a wiggle factor and you wanted to let it, really give it some room and tell yourself, this trade's got to completely reverse on me before I get out of it? Well, then you would have used this linear regression line here, which is the blue line, as you can see, or you would have used the 5-day moving average. So what I did personally, I told myself, I'm not going to give myself too much risk on Tesla. I'm going to go ahead and use the lows of the current new hour candle. So when we opened here, we started to trickle down, okay? I was going to wait for this to see, does it come down to the 200-day moving average, which yes, it did very, very closely, but it came down to this upper Bollinger Band here. And as soon as we came down into this range, we started to spike back up. Now, when we took out the first hour's highs, that's exactly when I got long. I took 2 contracts, 2 different strikes. I took a 700, which was an in the money options contract, and I took a 710, okay, which is at the money. It's right outside the current stock price, right? I took 2 contracts, both of them netted. One of them was like $700, the other one was like $865, something like that. You guys have to go to my Discord and check. I posted everything in the daily gains and losses channel. Something around there, totaled like 1,600 bucks on the trade. Not a bad little trade. Now, I wish I would have held it a lot longer. I pretty much just took the mantra, just get in. This is already an extended move, and then just try to get green and then just get the hell out, right? I only took 1 contract of each. Normally, I'm playing at least 5 contracts of Tesla. I did not want to chase it so much being up this much, so I just managed my risk a little bit differently. Now, obviously, we came into a price here, high price of around $730. Now, what I was outlining to one of the members in the Discord, we were on a live call intraday, is potentially this had room to stretch to 750, okay? And this still has room to stretch to 750 as well as 780 and as well as 800. But, okay, and there's always a but. This is a very extended move off the open and a fantastic move on Tesla today. But I do want to kind of point out, this is at the top of a channel level here. And you can see this candle here before we started to reverse into the close here, which I got trapped here. But as we started to come down, okay, we never got over, meaning we never confirmed getting out of this channel range. Now, it's to be expected. This is a great move already on the day. Beggars can't be choosers, and we can't be too greedy, right? That's the thing. When it comes to trading, you have to understand technicals. You have to respect your stop losses and respect the technicals, and you can't get too greedy, okay? So kind of where, and I'll make another follow-up video on my current trade, but it's a long trade, okay? So don't kill me, right? It's a long trade on Tesla. Yes, you can say, why would you chase the move that extended? Well, there's a couple of factors into that, okay? I did have a swing on NVIDIA as well as Airbnb from Friday. This gap open, I was able to sell out of those for a nice profit, okay? That's one reason. 2, I also took trades on Tesla in the morning, which was also profit. So I entered into this Tesla trade towards the end of the day on profits. Whether I lose or I win, it's not going to really affect my high or low on my personal P&L, just due to the fact that this is profits. I could still lose everything 100% on this one particular contract, or I actually have 2, but on these 2 particular contracts, and I would still be net positive on the week. Okay, hope that kind of makes sense. Just going to put that into a little bit of perspective. But what I was looking for here is when we came into, okay, this linear regression channel here, we started to pull back. When we pulled back into this 1 hour 5-day moving average here, we kind of held this area here at around the 11 o'clock hour. This candle here didn't really do anything. If you watch the price action on the 1, 2, 5 minute, 15 minute time frame, pretty much the stock was going sideways for the entire hour. Now, when this candle opened up, we started to bounce. And when we started to bounce, I said, here it comes. Here it comes. Here's the bulls stepping in. Here's the bull flag, right? If we look at big pop candle, sideways, 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 getting tighter here. And I was expecting the bounce, and we got the bounce, and we started to pop, and we never took out the highs and got over this channel, and it started to aggressively sell off. Now, I'm still in this trade. You may be wondering why. Everyone has a different level of risk management, but my stop loss on this is a loss of the 10-day moving average, currently sitting at around $705, $710. Let's just call it what it is, right? So currently, if we do start to lose this area here, which is this breakout candle, the original breakout candle that I entered, which is 707. If Tesla starts to lose the 707, which would also be a loss of the 10-day moving average, and starts to aggressively pull in, I'm going to have to exit that trade. But here's where traders can get frustrated and get extremely pissed off, right? Because there's a possibility that I could get stopped out of this trade. If I get stopped out of this trade at around 707, 706, And Tesla pulls back to the 200-day moving average on the 1 hour time frame at around 697 and consolidates, let's say maybe Wednesday, and Thursday starts to pick up and gain steam, and by Friday explodes through this 731 channel, I'm going to be very upset. Okay, I'm going to be very, very upset. So I'm going to manage this trade a little bit tight to the vest. I'm going to keep a close eye on it. If it does lose this 10-day moving average, which was my original breakout spot, right? So as of now, what do I mean by that? I mean that on the first trade that I took today, it was from this breakout spot. If I was to just draw a line going this way, that would be below the 10-day moving average, which is where I wanted to hold. Obviously, we're below that. But if we come back and we do something like this, right? And I stop out here because we're under the 10-day moving average, I'm going to be very upset. Okay, I'm going to be very upset. So I'm going to kind of manage my risk. What I'm going to see is, what do we do when we come here? Do we try to bounce, get rejected, and then flush? Because if we do flush, I might have to exit this position because the next stop is 697. But if it's just a short-term flush to give time for the rest of the moving averages to catch up, which is a 20, by that time the 20-day moving average will be rising, and then we could do this, right? So this is one of those situations where you kind of have to use your experience and use your technicals to kind of manage it, because this is more of a free-flowing trade for me. This is not a scalp. This is not a particular I need to get in and I need to get out. I'm going to allow this, enough room and enough time to work. Now, one of the reasons why I'm doing that, if we look at the 4-hour time frame, this big breakout took out the 50-day moving average, took out all these levels of supply, the 100 and 150-day. Now we're pulling back into the 100 EMA, but we have the rising 5-day moving average on the 4-hour time frame. So as more time passes by, I could see this creeping up into the 707 range, right? The green line can creep up into this range, and then this could just be a 4-hour bull flag, right? This could be a 4-hour bull flag if this pulls back one more and then pops, right? Now, if it pops, this is going to be a massive trade. 760, 800, right? I would be looking to target and sell out of my position at 760, 765, okay? That's just where we're at. Just a quick overview. Let's look at the daily very, very quickly to kind of see where the hell exactly we're at. 750 is going to be the linear regression. That's going to provide a lot of resistance there. So just keep that in mind. If you do want to play a little bit tighter to the vest, if we do, if is the key word, if we do make it to 750 at all this week, you might want to think about taking profits. And I'm being serious. Take some profits. If we get over 750, then potentially the next stop and landing zone is 777, and then over 777 obviously is the 800 area. I hope this video kind of helps. If you guys are interested in kind of learning how I day trade stocks on a day-to-day basis, options predominantly, 98.99% of the time I'm trading options. The other 2% of the time I'm trading futures, which is futures, right? If you guys don't know what futures are, look it up. With that being said, I'll catch you guys all in the next video. Make sure to like, comment, and subscribe. Also join my Discord. That link is down in the description box below. If you guys want access to all of my strategies and all of my information that I have locked inside this brain over 7 years of trading, then definitely become a lifetime member of evolutiontraders.com. You're going to get access to all those Discord channels with watch list and intraday callouts and signals, and kind of technical analysis, as well as one-on-one Q&As, so forth and so forth, trainings, webinars, all this kind of cool stuff. And I'll see you guys all in the next video.